It is July 15th, 2014. Current time is 12:18 GMT. Jay Meisler here with a daily Forex trading outlook. As I noted over the weekend, I mentioned the Canadian dollar's performance after data came out on Friday, and show how sensitive the market is, or hypersensitive it is, to anything that changes interest rate expectations. Well, we saw it again today with the UK, where inflation came up above expectations, and cable reverse course had an outside day here, and we're now pressing the recent highs. It shows you, first of all, it's a summer market. Number one, so liquidity is thin. Anybody betting has a low risk tolerance, but really it's all about interest rate expectations. And that brings us up to today's key highlight. We have a bunch of U.S. data, but the key is Yellen. Everybody expects it to be dovish. Anything other than dovish would be the surprise, and that's where the bigger market reaction would be. So far, she, especially after the recent jobs number, how she explains that away is another story. But then again, wage growth is still tepid, and that is maybe the key factor. But whatever the case, just be aware that news matters, and it's all about surprises. And you can see by the price action in, I said, the Canadian dollar, and then again in sterling, how sensitive the market is. As for the euro dollar, it continues to trade in that range I mentioned over the weekend, 135.75 to 137.50. It keeps trading around 136. This pattern's gone on for a long time. When it's broken, it'll give you a signal for the next directional move. You would think it's eventually going to be to the downside, especially after what Draghi said yesterday, and I will address that in an article later today. But for now, just Eurodollars in this range, more cross-focused than dollar-focused, and as such, 135.75 to 137.650 until broken. So that's it. We have U.S. data, but more important is Yellen. Keep an eye on what she says or what she doesn't say. The market is going to be hypersensitive, and it'll probably be very defensive going into it, but probably with a slight dollar negative bias, because the market expects it to be dovish. If we look at charts very quickly, I'm sorry I went on, but it's more about news than charts at the moment. Look at the 200, 400 period moving average. It's flat. Look at the 100. You got the 200 below, the 100 is above the 200, but look, that 100 is just about flat. 200 hour is tilted down. So really no change, 135.75, 137.50 until either side is broken. More important is 134.75 to 135.02 on the downside, and probably 136.75 on the upside. So I said 135.70, 136.50. Now, one thing, you've seen me mention this before. I'll mention it one more time. This is one of something I keep getting such great feedback. I'm going to point that out again. These are 20 common sense trading tips that I use, I developed, I'm passing it on. All you have to do is click on this link right here. It's embedded. You'll see it's 20 common sense trading tips. You're going to come away with something by reading it. So that's it. Jay Meisler toning out. Click on this link. We will touch base again tomorrow. This is a trading outlook for July 16, 2014. Jay Meisler here. I'm doing it a bit early, late on Tuesday afternoon because of personal reasons. But I think sometimes it's better to do it this way because you're not influenced by the overnight or short-term moves. I've been talking about the euro dollar having a downside risk for some time. We all got lulled into complacent ranges, but Yellen really didn't say anything, but the market did react, and the euro at least did break that 135.75 low. Now, if you look at the current pattern in the euro dollar, and I think this is worth noting, it's traded at 136 level 9 days in a row. That's 136. When you get a pattern like that and it goes on for almost 2 weeks, you see positions get trimmed, and when it's broken, you often see a directional move. So we'll see whether 136 prints on Wednesday. If it doesn't, it shows that there is a vulnerable downside, and we can't rule out a risk of a move into the 135 figure to 50 level. So let's look at some levels here in a market, as you can tell, which is hypersensitive to news. You saw it in the Canadian dollar on Friday, as I mentioned. You saw it in sterling. You saw it in Yellen. You got to watch U.S. data more than anything else right now, and UK data for that matter, because those are the two currencies where more likely to have a rate rise, and the market seems to be most sensitive to misses or even meeting expectations or exceeding them in data, as you saw in UK inflation. So okay, here we are. Let's look at the 4-hour charts. I think that's a good one to look at least for levels on the downside. We just briefly got below that 135.64 level. Then we got 135.35, 135.12, one ahead of 135.03, 134.75, 135.03 are the key levels to watch on the 4-hour. You still got a flat line. Actually, 100 and 200 period moving average is basically flat line right now. But as far as the downside risk, I said I just laid out the levels at least on a 4-hour chart. Now, if you look at a 1-hour chart, we'll look at the upside levels. The breakdown level was 135. Let's get it. 75 here, and around 135.88. So we'll make it 90. So we'll make 75 to 90 is resistance. Only above it would we see 136 again. And I said 136 has to print to extend this current consolidation or congestion, whatever you want to call it, to 10 days in a row. That really, for Wednesday, where you got UK unemployment, Bank of Canada monetary policy decision, and Yellen repeats her testimony. That sums up no data from the U.S. So that's where we stand right now. As I said, I laid out the levels. I would say 135.50, although not a technical level, but probably the level that's determined when we go after 135 and the focus stays on 136. But as I said, you got to get above 75.90 to put that 136 in play again. So you have your resistance, you have your supports. Below 136, the market will look to sell blips. If we touch it again, then we're back to back to the old ball game. Otherwise, if, as I've said many times, and thank you for those who have given me feedback on my articles. I'll post this one again. It's my 20 common sense trading tips. It's really worth clicking on this link, read them. You will take something away from it. And if you take something away from it, you've got, I've done my job, and you've got a useful tool. So click on the link. Good luck and good trading.